Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Yonta Good Evening TV on Tuesday, December 2nd. I'm Huang Peng Ri. Today we'll be discussing several topics. First, we'll look at investment opportunities in Chinese stocks within the US and Chinese markets, as well as the associated risks. In addition, we'll talk about Cryo and MongoDB, both of which released their earnings reports yesterday. All right, this week, honestly, we're still here. Tomorrow, we'll have the ADP report, as well as the current Fujian index and September's industrial output. So there will be quite a bit of data, and we'll look at it then. All right, first, let's take a look at what message yesterday's released ISM Manufacturing Index sent to the market. The overall index came in at 48.2, which is lower than expected and also lower than the previous value. Among the sub-indices, prices were higher than expected, but new orders and employment, which are related to output, both missed expectations. And this trend is moving downward. So we can see that the current overall manufacturing index reveals some trends, including declining employment, weak demand, and rising prices. Right now, what we're seeing is a situation where it doesn't seem to be a very good situation. So at the moment, the Fed should be paying more attention to employment. That's because right now, inflation, for now, it can still be attributed to tariffs and trade policies. Overall, people still see inflation as a one-off factor, so it depends on when this tone will shift. But before that shift happens, it seems that for now, inflation's not as important as employment. On the other hand, if orders continue to decline, and if today's decline is compounded, it will show that the manufacturing sector as a whole is still under pressure, and we haven't yet seen a gradual recovery. There hasn't been any obvious improvement. Another key point is that supplier delivery times are speeding up, and this faster pace indicates that demand is relatively weak, so accordingly, the slight increase is happening rather quickly, and since this is treated as a negative factor, it drags down the overall index. However, it doesn't seem to have a significant impact. Let's take a look at the next chart. In this chart, we can see that the current M421 index, for example, is still relatively at a low level. The overall reading this time is relatively low, and the highest point is also affected by the faster delivery times in the manufacturing sector. But overall, let's still take a look at the sub-indices, and we find that both new orders and employment are showing a downward trend, which is actually quite concerning. So what message does this University Student Confidence Index reveal? It tells us that the current economy is still not doing very well. That's the main takeaway. Although expectations for a Fed rate cut have increased, this isn't a positive reason for the increase, so we'll have to see what more clues the next set of data will provide. Alright, so at the moment, their index is still under pressure, and it's expected to continue showing a gradually weaker trend. Next, looking at the US Treasury yields, we can see that yesterday, in fact, all the yields rose quite noticeably, and this was mainly because of the Bank of Japan's easing policy. So now, this has actually led to a rise in government bond yields across various developed countries, and at present, the situation is relatively stable. The 10-year yield has also risen significantly now. It's quickly approaching the 4.1 level again, and for the 30-year yield, it's pretty much the same situation. Next, looking at the stock index, as we mentioned yesterday, we saw a rebound, but it seemed to be accompanied by shrink in volume. Now it looks like this consolidation is still ongoing, and the rebound appears to be losing momentum and can't break out of this range. So going forward, it seems likely that the market will continue to fluctuate within this pattern. You'll see the same situation with other indices. For example, the Dow Jones has declined. As for the Nasdaq, it had a slight increase, but overall, it's still fluctuating within the range, and actually the S&P 500 is in the same situation, and the Russell 2000 is pretty much the same as well. So at the moment, there really isn't a clear direction for the indices. Alright, next let's talk about global developments. And also, there are some pretty important news items, such as China and the United States were originally scheduled to reach some agreements on rare earths by the end of November, but over the past few days, we haven't really seen any news about it. Today, however, we saw that China has issued a new rare earth export license, which is aimed at domestic production. That means those companies can sell their products overseas, and it seems to be partly to ease current supply concerns. In fact, it also indirectly shows that if this export license is being issued, it means that it should, to some extent, be used as part of reaching agreements with other countries. Right now, it actually looks like the cooling of tensions between China and the US is continuing. At present, it's expected that in 2026, there could be up to 4 mutual visits between the leaders of China and the US, up to 4 opportunities for the heads of state to meet. As for what comes next, overall, we're currently in a relatively calm period in China-US relations. Or, for example, companies with permits include Jinli, Yangqi, Ningbo Yuncheng, and Danke Sanhuan. These are all companies further down the supply chain, so it depends on whether these entities can receive timely subsidies. Additionally, regarding the Taiwan stock market, there's a subsidiary called B-Lite. It's a US-based subsidiary, and Renshin holds about 48% to 19% of its shares. This company is developing a new drug for ocular diseases, specifically Stargardt disease. The Phase 3 trial has successfully unblinded, and they expect to apply for FDA approval in the first half of next year. This drug is actually quite impressive. It's the first of its kind in the global market. To be clear, it's not something repurposed from an old drug, it's something entirely new, a completely novel product. This company is also the first in the world to do this. Specifically targeting this, the team has made a breakthrough in disease treatment, and at the same time, it's also the first company in Europe and the US to develop this entirely new mechanism. It's a company with a brand new mechanism and a new type of drug, so you can keep an eye on the stock price movements of Renshin and V-Line. Today, Renshin stock was quite volatile. Some people think this is a case of good news already priced in, or that people are selling on the news, but that's not actually the case. In fact, since this company is also listed on the US stock market, so going forward, you can watch its performance. It's actually quite strong. Yesterday, it went up by 12.06%. At the same time, right after the market closed on Monday, it managed to raise $400 million in a very short period at Monday's closing price. You can see that this capital raise was done at its closing price in US dollars, so there was no discount. That means at present, global investors are relatively optimistic about the company's future development. Going forward, these funds will be used for the commercialization of new drugs as well as Now, as they continue to develop and expand, everyone can keep an eye on this company. Since Renshin is also a listed company in Taiwan, it's worth paying attention to as well, and you can use it as a reference together. Next, you can see that currently in the US stock market for this deal, they have recently listed some of the bigger risks, so let's analyze them together. First of all, as we mentioned Dongpeng at the beginning, the current situation is still relatively high. But everyone thinks this phenomenon is a one-time event, believing that it's due to the effects of trade and tariffs. If trade and tariff restrictions are lifted or eased, this issue is expected to fade away. However, he pointed out that this is not necessarily the case. If inflation doesn't come down, it could stay around 3%, and in fact, it has already stayed at that level for quite a while, which everyone knows. Currently, people are relatively turning a blind eye to this issue, so what could happen next with inflation? If they can't bring it down, if inflation can't be brought down, and the Fed still needs to keep writing policy like this, one possibility is that the Fed could lose credibility, and at the same time, it would be unable to anchor inflation. Actually, this is quite a serious issue because of this. A central bank's credibility takes a lot of time and effort to build, but it's actually relatively easy to destroy. Once it's damaged, it takes even more effort to rebuild it. In addition, credibility serves as an anchor for inflation. So this week, I'll be looking at the University of Michigan Consumer Sentiment Index and both short and long-term inflation expectations. At that time, we'll take a look at the state of this inflation anchoring. If inflation can't be anchored, it will actually have a pretty significant impact on future consumption, production, and the overall economy. So let's keep an eye on this going forward. If inflation can't be anchored collectively, then you'll need to put in even more effort to reestablish that inflation anchor. For example, it might require raising interest rates or using other measures to gradually stabilize people's expectations about inflation so that inflation doesn't rise sharply. So this inflation anchoring is actually quite important because everyone still needs to pay attention to it. Ideally, in the future, society and the public won't believe that inflation will keep rising. If everyone thinks that inflation will continue to go up, there will actually be some corresponding sell-offs or panic buying and so on, and this can really impact the economy. It's actually quite significant. On another note, the job market is currently weaker than expected, and this could affect the economy. Right now, this is also something everyone is paying attention to. Right now, the main concern is still inflation, but going forward, it is expected to come down. Thirdly, the outlook for AI has shifted to a more optimistic expectation, but valuations are continuing to decline. In fact, we are already seeing some of this happening, especially with the strong performing AI stocks. We're starting to see a divergence, and in November, you can see that stocks like Oracle, SMCI, or those that previously rose together with AI experienced a noticeable pullback in November. So these are some of the current developments. These are now considered the main risks. Actually, since the rebound in April, the current level of risk in the US is already relatively high. So from April until now, the volatility hasn't been that obvious. It's just been a steady climb, because April saw a significant drop. So now it's basically like, from now until April, from April to last month it was a correction, a process arising, and now the increase has pretty much leveled off. Going forward, if there are more catalysts, sentiment could push things higher. Given the current relatively high level, volatility is likely to increase. At this level, the market will also react very quickly to any missteps. For example, if the Fed can't anchor inflation expectations, or if the economy is clearly affected, then the market might react very quickly. So at this point, everyone should pay more attention here. Also, to add another point, overall, consumer spending is still increasing. In addition, AI investment is expected to continue growing, which will boost productivity and allow companies to increase their profits, thereby driving up stock prices. Currently, he believes that shorting A shares is not advisable, meaning that those who short the market will have to bear significant pressure. He also mentioned a statistic about this. Relevant institutions pointed out that short sellers actually had unrealized gains in the last week of November. In the first 3 weeks in November, these unrealized gains reached $95 billion. However, by the final week, those gains had turned into an unrealized loss of $80 billion. So the market situation can change very quickly. You can see that there was a significant decline starting from November 14th, but by the end of November, then it continued to rise, so by the end of November, the increase had narrowed in terms of the index. So overall, it seems that people might be worried about AI, or feel that valuations are too high, or are uncertain about the economic outlook going forward. But he believes that you shouldn't short the market lightly, because it's very easy to get caught by the market. Get squeezed out by a market reversal. In addition, Bloomberg mentioned that currently, these tech companies are able to drive the stock market to new highs because their business models are asset light and deliver high returns. And each of them has their own strength, so they don't really encroach too much on each other's fields. For example, each company has an area they're good at. Apple focuses on consumer electronics, Amazon is in logistics, Google is in search, and Meta is in social networking, and so on. Now, each of these companies needs to develop large language models, which requires capital investment. So they're all spending a lot of money on capital expenditures to compete with each other, and these models are in direct competition with one another. Whether these companies can maintain such high valuations remains to be seen. If they can't sustain these valuations, it could lead to a significant correction. These are some of the differing opinions in the market right now, and I'm just bringing them up for your reference. Alright, as mentioned in the You Want a Morning Briefing, you should be able to reach out to the Futures team for questions about this afternoon's program. Next, let's talk about Aaron. Aaron is actually the operator of the medical center we mentioned earlier. Currently, they plan to raise $2 billion through convertible bonds, and at the same time, they want to repurchase bonds that are maturing soon. This is basically a case of borrowing new funds to pay off old debts. At the moment, their stock is down quite a bit in pre-market trading. Overall, you can see that the AI 775 sentiment is still going strong. When it comes to company selection and adjustments, we're being even more careful in our choices. Lastly, regarding the strategy, yesterday they established a $14.11 million cash reserve, which is intended for issuing preferred shares and covering debt interest payments. This is mainly because Bitcoin has dropped a lot recently, and since the strategy currently doesn't have much cash reserve, people are worried that if Bitcoin keeps falling, there won't be enough to pay dividends or cover obligations. So that's where the concern comes from. The company is recommending building up a cash reserve to ease market worries. Right now, their goal is to at least be able to cover the next year's payments. Some of these payments include dividends or interest, and in the future, the goal is to be able to cover 2 years' worth. That's the company's current situation. So now it's a matter of seeing whether the company's stock price can remain stable. As of now, it's actually up in pre-market trading. We'll have to see over the next few days whether it can stabilize here, since it's actually been declining for quite a while, but maybe it can form a bottom at this level. Another thing to note is that Strategy has changed its year-end target price for Bitcoin. Originally, they were looking at $150,000, but now they're projecting a range of $85,000 to $110,000. So at the moment, it seems like Bitcoin's weakness, or you could say the sluggish situation, will probably continue for a while. Let's take a look at Azure and those Evan stocks. Their prices have actually been performing pretty weakly, and now they're down in pre-market trading. The reason is that at the moment, these companies are still in a situation where they require significant capital investment. Plus, they continuously need to take on more debt, so overall, that's the situation. In this regard, investors will have to make some choices going forward. Another thing is, as I mentioned, yesterday there was actually a very clear lower shadow on the candlestick chart, so we'll have to see in the next few days whether it can gradually form a bottom or if it will keep dropping, since it's already been declining. It's been more than 2 months. Alright, next, let's talk about investment opportunities related to China in the US stock market, which mainly include tech giants and ETFs. I'll focus on the tech giants, and I especially recommend Alibaba, Tencent, and Baidu. These companies actually are very clear investment targets, but they also come with a lot of risks. Here, I want to specifically remind everyone that the main risk is that, at present, these companies actually aren't making much money in China, but they also require large-scale investments. In addition, there are other major sources of risk, such as intense internal competition, geopolitical issues, and the difficulty of obtaining lenses. So why does investing seem pretty good right now? Mainly, it's because the RMB exchange rate has been gradually depreciating, and interest rates in the US are also gradually falling. With capital flowing out, these factors together have driven this situation. The improvement in sentiment and capital regarding Chinese ideas is another factor. In addition, valuations are relatively low, so overall, Chinese tech companies still have a certain level of appeal. There's also optimism being driven by the fact that, at present, we can see that China is actually on par with the US in many AI fields. So some people might think, in that case, if you're going to invest in American companies, you might as well invest in Chinese companies instead. There are people who think this way. So at present, these are some of the reasons to consider investing in China, but we also need to keep these risks in mind. Let's take Alibaba as an example. The company's stock price is represented by the black line, while its earnings adjustments are shown by the orange and blue lines. You can see that its earnings have actually been continuously revised downward over the past 2 or 3 years. However, at the same time, its stock price has been gradually rising. Although there have been noticeable fluctuations, the overall trend is still upward. So you could say that, at present, there is a certain divergence from the fundamentals. The current investment is mainly driven by optimistic sentiment, so going forward, this is something everyone should keep in mind when investing in this area. Also, you need to pay extra attention to the fact that its price swings can be quite significant. Here, you can see this is also Alibaba. The first part is its cloud business, and the second is e-commerce. Looking at the adjusted EBITDA by 2026, its margin is... Currently, for the cloud business, the margin is still in the single digits, but for e-commerce, it's 11.8%, which is still double digits. By 2027, e-commerce and AI are still in the double digits and even higher, but the cloud business is noticeably higher, even more than AI. It's been said that in China, even though they're doing AI, the profits aren't as good as what they originally made from e-commerce. So when it comes to AI, it seems like it's impressive and it grabs a lot of media attention. Plus, in terms of model applications and Processing and efficiency, they're doing pretty well, but monetization is still a big problem. So going forward, that's something to watch. When will China really be able to reliably use these models to make money? It's very likely that in the end, the real market importance won't be within China, but overseas. Right now, it looks like there's a lot of internal competition domestically, and overall, these models might just become a commodity. That is to say, it just becomes something with no real difference. You could use any of them, so it all comes down to cost. If that's the case, it's going to be really hard to make a profit because only the cheapest option will survive. You'll have to expand maybe to overseas markets or other applications in order to do this part. For example, right now you can see that in Singapore, the underlying architecture for their AI applications is Chanwen. So in the future, there might be even more opportunities coming from overseas. Even though Luca, that is Alibaba, has invested a lot of money, its profits aren't as good as in e-commerce. Still, the money that needs to be spent can't be skimped on, you could say. Previously, Alibaba's performance in this area was still at a very high level, and that hasn't changed. Just because AI isn't making money at the moment and future profits might not seem that significant, doesn't mean they're cutting back on investment. They still have to invest a lot. Yes, right now you can see the stock prices of these companies, and they're still quite a distance from their previous highs. So actually, you could. As for suggestions, you can control, or rather, you can adjust based on everyone's own situation. You can make adjustments based on the investment attributes and the technical aspects as well. Going forward, it's also important to keep the risks we just mentioned in mind. Another example is Tencent, which is also among the top 10 in US stocks that you can consider. Next is Baidu. Baidu is in a similar situation. Actually, after a surge a few months ago, it's now pulled back quite a bit. Alright, in addition to individual stocks, when it comes to ETFs, we've actually made our selections. We've listed these details here for your reference, including the names of the ETFs, their ticker symbols, the underlying indices they track, and actually one of them is actively managed, as well as their expense ratios. Some of their features, well, to be honest, there are quite a lot of China-related ETFs, and many of them are... So everyone can just pick the ones they're interested in or that match their investment profile. How do you go about making a selection? The expense ratios are all relatively high, and the lowest one we've seen so far is 0.59%, as shown in this table. Alright, so if you take a look at MCHI, for example, it basically covers a broad range as an ETF, while CQQQ is more focused as a technology ETF. As for FSI, it represents the integration of China's new and old economies. You can see here that its performance has been relatively weak lately. Now, this actively managed CTF covers China's tech giants, and actually, it's doing pretty well. Because it's actively managed, it can make adjustments. Its holdings are concentrated in large tech companies, so its flexibility should be higher. You can see that in the past few months, it experienced a noticeable drop. And this is also, it's mainly invested in these internet-related companies, so that's the situation here. The overall situation is still relatively volatile, so moving forward, everyone can refer to the table we just made for you, and then after screening, pick out the ETFs that match your own preferences, and then gradually build your positions. Alright, next, let's talk about the financial reports of these two companies. The first one is Credo. Credo is one of our stocks, and it's a company that focuses on connectivity solutions, and in this... Go out! Here, there are some films, and right now at the forefront, the speed is this FI226. The company mentioned that this is the strongest quarter so far. Currently, the company is benefiting from the ongoing build-out of AI training and inference clusters. They also pointed out that the scale of GPUs in data centers now isn't just in the thousands or tens of thousands, but rather in the hundreds of thousands or even millions. As we can see right now, the AI-driven mid to long-term momentum is still ongoing, and accordingly, these immediate infrastructure stocks will be the targets we continue to watch going forward. Many opportunities will emerge in the future. We've previously introduced Credo, and for details about the company's fundamentals and its products, please refer to our earlier reports. Currently, Credo has many divisions, but the main focus is still on active cables, like AECs. This division is the fastest growing part of their business. The main clients each account for more than 10%, And now the fifth client has started placing orders. He mentioned that. Currently, for connections under 7 meters, copper cables are still the main choice, because copper cables are cheap, stable, and easy to use. As for optical solutions, for short distances, there's actually no need to use optics yet. Right now, in the 100G and 200G range, stability is relatively good, mainly relying on traditional laser optical modules for conventional distances. And it's 1,000 times more, so the stability is much higher. So because of this, if we look at the current market size for short distance connections, it seems that copper is still the mainstream. Next, let's talk about the optical signal processor. As for this optical DSP, its growth right now is benefiting from the deployment of 50G and 100G, and in the longer term, it will come from 200G. That's because its PCI also has design wins, so it's expected that in the second half of the year, it will start contributing revenue. So you can see that the market size for its A-series department is expanding, along with this DSP and PCI. It's expected that there will also be some wins, and in a few years, it could contribute some revenue. In addition, he also mentioned 3 new major sources of growth. So apart from this month, he actually has some developmental projects. The first is this zero theft optics. This technology can ensure the reliability of optical transmission, but mainly it can be used for remote monitoring of each connection node. It can detect if there are any faults or if everything is running smoothly. So it can be used at a terminal to perform inspections. If there are any issues, it can troubleshoot and resolve them on its own. This way, it improves the stability of the connection and reduces the likelihood of a complete GPU system crash. So, for example, if you notice that your connections are already having issues on many nodes, but you still keep running the cluster, it could end up crashing the whole system. But after this fab tool is released, you can add a terminal, use the application, and quickly identify which nodes are having problems so you can troubleshoot them right away. This reduces the chances of a total system crash. This feature could start contributing to revenue as early as the second quarter. Also, it uses micro LED technology for this purpose. It's a new connection solution, and the transmission range can reach up to 30 meters. This makes it more suitable for our network applications. It's expected to start generating revenue in 2028, and the product is likely to be called ALC, which is a bit similar in naming to AAC. This refers to the active LED cable. According to what I was told, the market size for this could eventually reach more than twice that of AAC, so this is also a major source of future growth. It's a brand new connection solution. Next, this is meant to address the separation between different processors. Also, when it comes to optimizing data transmission, there are certain separation processes that occur during transport, and at the same time, there's a need to optimize how the data is delivered. This solution can address those issues as well. Whenever we talk about the bottleneck in computational connectivity, upgrading or iterating memory just can't keep up with the current pace of processor upgrades. That's where this gearbox comes in. This gearbox is suitable for both scaling up and scaling out, as well as for near optical packaging. As for this thing, the market size is expected to reach several billion US. With these kinds of product innovations, it's anticipated that the annual revenue will see a significant increase, growing by 1.7 times, and the gross profit margin could increase fourfold, with the gross margin staying above 60%. Currently, you can see that the overall trend is that the AI boom is still going strong, and the demand is still there. Looking ahead, customer stickiness remains very high. As for these orders, currently they have a lead time of over a year, and they're increasing quarter by quarter. Overall, you can also see that he also mentioned that customers are now buying connectivity solutions and processors together, so they haven't been building up extra inventory. It looks like customers are just buying what they need, not stockpiling. They're not panic buying just to secure supply. They're not buying things randomly just to grab something. So at the moment, it seems like this kind of behavior isn't really happening. So this might help ease some of our concerns about a potential bubble. As for this company, its biggest clients are Amazon, Microsoft, Meta, and Ansci, with Amazon, Microsoft, and Meta being the main ones. Among them, Amazon is the largest client, accounting for over 40% of their business. He also mentioned that each client basically represents a different market because their architectures and solutions are all different. So that means their products have to be redesigned for each of these clients. He believes that currently there are 6 major hyperscalers in the United States. There are also some in Asia, and from this we can see that actually Currently, the hot topic is the value of AI, and everyone is still working hard to build it. Even though there are many different standards now, when it comes to companies actually operating in these areas, especially on the supply chain side, there are still plenty of opportunities. So right now, cryo is showing a clear pre-market increase, and going forward, it could see a wave-like trend. This company is actually quite sensitive to news, so its movements are often influenced by various updates. So for everyone, we can now confirm its future prospects. The outlook is pretty good, so it's about timing your position based on this situation. Now let's talk about NDV, MongoDB. We've discussed this company before, and for its future developments, you can basically refer to our reports. This company just recently changed its CEO this quarter. The new CEO mentioned that the company is currently at a turning point. He's very optimistic and believes there's a chance for the company to become the go-to data platform of this era. In English, that's a generational AI data platform, so that's what it looks like. He has pretty high expectations for the company. For MongoDB, he believes the company is well positioned to ride the current AI development trend. Alright, so for this company, its latest quarter is fiscal year 3 Q26, and its revenue grew by about 20% year over year. The main driver is its subscription service for data structures, which saw a 30% increase in revenue. This shows that Atlas contributed to the growth. And in addition, for this company, MongoDB, so far this year, they've added over 8,000 new customers, which is a 65% year-over-year increase. Currently, about 70% of the company's total revenue comes from these customers. The company emphasized that while AI is now a definite trend, even before the arrival of OpenAI, many large organizations were already using this company's services to simplify their data structures and modernize their organizational frameworks moving forward. Looking ahead, the company will continue to embrace AI. Whether it's a new AI startup building innovative applications or established companies developing AI agents, they all need updated architectures and more timely support. That's why we say that the current DB architecture is actually a great fit. This architecture meets the current demands of AI, allowing for the storage of unstructured data and enabling more immediate mobilization and organization of information. The company also mentioned that at present, there's still very few AI agents that can be fully utilized, so going forward, AI agents represent a huge blue ocean with significant and growing demand. This includes the need for information storage and development. The company expects to continue benefiting from this trend. In the future, the company will keep deepening customer relationships and continue to innovate. This is the typical development path for many companies. So currently, that's the part about AI. Continuing on, the company's original intention, meaning before AI, was that customers would continue to have needs for cloud migration and modernizing their IT systems. This is still ongoing, and the trend is expected to continue for the next 5 to 7 years, or in other words, there will still be this demand. As for this demand, the company aims to become the leading information platform in the digital era. This year looks promising. The company's revenue guidance has been raised with a target of $2.435 billion, which is higher than the previously expected $2.35 billion. The gross margin is also expected to improve in fiscal year 2027. Now, this earnings report actually came after quite a long wait because the company is involved in AI applications, and there were some doubts about this area, with relatively little capital flowing in. However, this time, both the earnings report and the outlook were strong, with the outlook being raised as well. So, this has eased concerns about the company's operations after the new CEO took office. People were worried that with the new CEO, the company's operational efficiency or execution might not be as good as before, but so far, that doesn't seem to be the case. Looking ahead, one thing to watch is how well the company is expanding internationally. How much support does it have from the developer community, and how difficult is it to adopt and switch over? Because its competitors are all large companies with plenty of resources, like Oracle and others. So the competitive environment it faces right now is pretty tough. It mainly relies on its developer community, and also, in the end, the effectiveness of its technology will be seen in whether it can actually win over new customers and get existing customers to move their storage from other providers to them. This will be a key point to watch going forward. Currently, the trend for MongoDB hasn't seen any significant rise over the past few months, except for that breakout gap. Looking ahead, it seems like there could be a steady upward trend. Today, there was a noticeable surge, so we'll keep monitoring it closely and pay attention to future developments. Now let's take a look at the strength and weakness on the chart. Currently, before the market opened on Tuesday, the overall sentiment was relatively stable, and large-cap tech stocks saw slight increases. Currently, the companies with the most crab-related stocks in the US include MongoDB and Quiddo, which we just selected. Somewhere on the list, the decline, or perhaps due to individual company-specific factors, is primarily related to Bitcoin, like American Bitcoin. Currently, if we look at the S&P 500 index, the main gainer is Teradyne. Oh, it seems that after the news of investment from Hawaii yesterday, the stock continued to rise, and related companies as well. Companies related to MongoDB, like Datadog, also went up. Among the listed companies, many large tech firms also saw significant gains, so for now, the situation's relatively stable. As for the declines, actually, over here, it also seems like it's due to individual company factors. This one's a gold company, and right now, it might just be a consolidation phase. We need to look at the trading volume. Currently, Nvidia, Tesla, Google, and Amazon are all showing slight gains in pre-market trading. So the key is whether this upward trend can last until the market closes. If it does, it means the current sentiment is relatively stable, and last week's decline, looking back, it seems like the market is still fluctuating within this range, waiting for a new event to happen. That's all for tonight's discussion. Good night, and thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.